Hello, everybody. Welcome to this webinar brought to you by Kenanga Investment Bank in collaboration with Bursa Malaysia. So this is Shen Zhu. I'm the moderator for this webinar. Today, we are going to talk about Malaysia Market Outlook 2021. And it's going to be an exciting topic because you know that 2020 was a very eventful year, from the outbreak of a pandemic to the peaceful transition of power in the US, executive power in the United States. And then today, this year, we are looking at the rollout of the vaccine. So will the vaccine effectively curb this economic slowdown? So today, we are going to delve deeper into it. Our speaker will share with you his perspective in this global market outlook, as well as Malaysia stock market outlook, as well as the vaccination plan. All right. So how are you guys doing? Okay, we already see that the room in Zoom is already full. Okay, now if you are ready for this session by Kenanga, please type yes in the chat box and let me see. Wow, so many. All right, so this session now we are already full house. So we received overwhelming response at about 2,000 registrants for this webinar. Yes, for people who are asking about YouTube, we are simultaneously cast to the YouTube. I mean, in a short while, I'll drop you the YouTube link if you have any friends who want to catch this webinar. All right, so let me go ahead with the disclaimer. Now, whatever we share on this webinar is only for educational purpose. In no way that I give any recommendation to buy or sell. So if you decide to buy or sell any stock after this webinar, you do it at your own risk, okay? Now, Kenanga Investment Bank has arranged a series of webinars for you for the entire year of 2021, which also includes some corporate presentations. So today, of course, we have the Malaysia Market Outlook 2021. And then on the 23rd of March, which is next Tuesday, we are going to do the second corporate briefing by Tawin Holdings Berhad. So we're going to have live chat with Tawin Holdings Berhad 2021 new transformation plan and future prospect. And for those of you who want to know more about Tawin Holdings Berhad, about the company background, about the business performance and the future prospect, please reserve your 23rd of March Tuesday to join us as we invite Dato Sri Ngu Tian Ang, JP, and Mr. Justin Wong from Tawin Holdings Berhad to share with you. Okay, Dato Sri Ngu Tian Ang is the Group Managing Director of Tawin, and Mr. Justin Wong is the CEO of one of the subsidiary company. So we invite the management to come on our CanTrade webinar, so you have a chance to grill the CEO and the management about their future plan. Okay, for any question you want to ask them, come to this CanTrade webinar for this corporate presentation by Tawin, so you can ask the management yourself. All right. And on the 8th of April, we also have this corporate presentation by Pastech International Berhad. So the title of the webinar is Live Chat with Pastech International Berhad, Technology to Keep the Lights On. So we also invited the Group Managing Director, Mr. Paul Lim, to come and share with us his company background, business performance, as well as the future prospect. Then on April 27th of April, we have Kenanga Research webinar by the head of Kenanga Research, Mr. Koh Huat Sun. All right. So this is the webinar plan for the next 2 months. All right. So without further ado, let me introduce our speaker today. So Mr. Ooi Kok Hwa is the managing partner of MRR Consulting. So he deals mainly with business appraisal, investment, and financial training. Presently, he is a licensed investment advisor by the Securities Commission of Malaysia. And he himself has spoken many times on the Kenanga Investment Bank and our platform. And then every time his session is also sold out. So today you're in luck because you can hear him speak live on our Kenanga webinar. So without further ado, let me hand over the session to you, Mr. Ooi.
Hi. Good evening to everyone. Okay. Thanks for Kenanga for giving me a chance to share with you. My name is Ooi Kok Hwa. Okay. I'll share with you on the stock market outlook global economic outlook, as well as the latest development in COVID-19 and Biden policies. Okay, these are the few areas I'll share with you tonight. Okay, I believe we actually make money this year. Okay, last year as well. I think last year actually quite a good year. Okay, now we look at the latest development in actually the COVID-19. Of course, it's actually, it's a pandemic, 100 years, happen one time. Okay, so initially we don't have the experience on how to handle it. Okay, if you look through the latest cases, okay, actually, if you have been following the past few webinar, okay, from the first day, from the first one, I think it's from the last year, after the pandemic, I think in May, I already said already, this pandemic actually quite similar to the pandemic is actually Spanish flu. Okay, not really the same in terms of the virus. It's actually the behavioral, the patterns, and everything's quite similar. Okay, and Spanish flu is about 2 years. Okay, from 1918 March, ended in actually 1920 March. So if you listen to the latest announcement, they also say that this COVID-19 will end in actually in next year, 2022, roughly, first quarter. So you notice that actually about 2 years, and you notice that actually the cases is actually coming down. Okay, the cases coming down lately. Okay, now, and these numbers is actually the global numbers. Okay, and you can see from here some spike up recently. Okay, especially from Europe side. That's why they have a new lockdown. Italy, okay, some countries actually in Europe. Okay, so that's why you notice that suddenly, the glove prices actually rebounded again. So actually, our glove stocks, the stock prices actually follow quite closely to the newly cases. Now, if you look through the few big countries, especially US, actually US cases actually lower than the Brazil right now. Okay, and US numbers actually below 50,000 already. Okay, it will go even lower later on. Okay, I'll share with you shortly. Okay, and the rest actually, the European countries, you can see some spike out a bit. Yeah, apart from the Brazil numbers. Now, US actually here. So this actually the percentage of people actually have received at least one dose. So right now, up to 16th of March, we have about 21% of American injected, vaccinated. Okay, of course, the highest actually, is Israel. It's about coming to 60%. Okay, our numbers and the rest, even like China, actually very low, very low. Okay, so I think the next one will be the UK. Okay, now, and US, so they actually started roughly about 20th of December. So until now, so we are talking about 2 months plus. So you can see 21% plus. So roughly we're talking about 1 month about 10%. So if you count 1 month 10%, you notice that this actually the US CDC forecast by July. So US will reach 70%. So why this 70% is actually quite important? Okay, because if you remember, the herd immunity is roughly about 70%. So meaning to say, in another few months' times, okay, we are already coming to April. Okay, so 3-4 months' time, we will reach roughly about 70%, 70%. So by that time, the cases will come down to below 10,000, or maybe at that time will be below 5,000 and below. So the US economy, given the kind of 1.9 trillion that kind of stimulus packages, okay, to to fight this COVID-19, so of course will spur the economy. So of course, yesterday the Fed say no, we'll only increase interest rate is actually in the 2023. Okay, they'll continue to do buyback bonds activity every month, about 120 billion. So my view here will be, I'll share with you later on. You notice that a lot of people actually view that they'll taper much earlier than 2023. Okay, that's why bond prices have spiked out again. Okay, now this actually extracted out from the Fleet Securities research. Okay, based on the announcement, so roughly these companies produce vaccine. Roughly will produce about 90 billion vaccines. So if some actually 1 dose, some actually 2. So roughly about 5 billion plus. So basically 5 billion plus, we're talking about this year, by this year. So we can achieve, if let's say, depends on how fast actually, the vaccinated people. So roughly about 2/3 of our global population. So my view here, I think including Malaysia, like we actually order more than we need already. So given like Malaysia, this house, we are relatively, not big country. We also order more than we need. My view here is actually the vaccine. Now we have a lot of vaccine ready. Okay, almost like surplus in vaccine ready. So that means it will depends on how fast each government to carry out the program. Okay, and the willingness of the people to get vaccinated. Okay, my view here is actually safe or not. I think in general, once actually approved by WHO, I think should be quite safe. Okay, our government also the same. So now, why I want to share with you the bond yield. So because you recently noticed that the world market actually focusing on pay attention to the bond yield. Now, recently spiked up above 1.9, 1.5%, then everyone actually scared. So why 1.5%? Okay, have you ever asked these questions? So if you remember 2 years ago, the second half of 2019, July onwards, if you remember inverted yield curve, remember that? So inverted yield curve at that time, the yield is actually around 1% here, 1.5 to 1.7 around that time. Here, this part here. So, and if you based on economic theories, each time you see inverted yield curve, you will see in roughly about within 2 years time, you will see economy drop into recessions. Roughly 2 months. 2 months. In fact, so only about from July, about 9 months only. March already the world plus the pandemic, the drop into recessions. So my point here is actually last year the crash in the global market crash, beside pandemic, is actually due to the earlier on 10-year cycles. Okay, it means we have a 1987 crash, then we have 1998 crash, roughly about 10 to 11 years. Then you have 1998 crash. So it's supposed to be 2019 crash, right? Okay, so you extend, as I said to you, it's roughly about 10 to 11 years. So you have crashed last year, March. So the key point here is don't expect if let's say market come down, do have some correction, will be similar like last year crash. So this is actually my key point. I repeat, don't expect the market correction, even though maybe the next few months we have correction, because normally market will come down in actually April, May. Okay, sell it may go away, then for a few months correction, then after it will start going up again July, August. Okay, sometimes may extend to September, depends. Okay, but that kind of correction will not be the same like last year March drop. Okay, last year that kind of crash, Dow Jones crash from 29,000 drop to 18,000. It's actually 10 years only happened one time. Okay, I repeat. So, and key part here is actually the yield already recovered. So we are going to have the next roughly about, I would say, at least more than 5 years. We are talking about high economic growth with high inflationary environments. Okay, with high interest rates. Okay, the bond yield will go higher and higher and higher and higher and higher. Okay, something like this, higher and higher. So in between may come down, but actually will go higher. Okay, to expect that kind of suddenly drop in the bond yield, everyone rushing put their money actually buying bonds, that kind of crash, I don't think will happen really. Okay, we are with the stimulus packages. Okay, if you remember 2008, all the total stimulus 1, stimulus 2, stimulus 3 is actually about 4 trillion. This round is actually last year about 4 trillion plus this 2 trillion, 1.9 is actually about 6 trillions. 50% more than 2008. So basically, we are going to talk about the money printed we're going to generate inflation. That's the reason why, you know, bond yield getting higher. And because of that, okay, bond yield getting higher, you know, those people don't do valuation on the tech stocks. They start to find that, hey, actually, you know, the tech stock actually, the value actually lower, because if you depends on the future discounted cash flow, discounted back with high interest rates, the value will be lower. Okay, so that's why, you know, we have the correction in actually tech stocks recently. Okay, I repeat one more time. This price, to the bond yield up to 1.5% is actually similar to already go back to the July inverted yield curve already. So basically means that the whole thing already recovered back to normal level already. Okay, and from now onwards, the bond yield will going to go higher and higher, given the money printed, you know, from this later on 4 trillion plus 1.9 trillion are going to print money, going to generate inflations. So the key part is actually central bank in the world is going to manage will be how to manage, you know, with this hot money the inflationary environments. Now, so look at the next one. Actually, look at the Biden policies. So the stimulus packages we're talking about, each one get 1,004. So if your family member, husband and wife, 2008 already, you know, one-time payments. So you're on top of that, you do have for those unemployed, the unemployment claim is actually 300 weekly. So with this stimulus, you're going to get extra 300. So if you divided 300 divided by the 40 hours, you're talking about 750. So 750 plus your unemployment claim, or 300, okay, those 750, you're talking about 15 US dollars per hours. Okay, it's as good as working ready. US per hour, normal wages, hourly wages are roughly about 15, mean about 10, 11, 12. So 15 US dollars actually quite good already. It means to say you don't have to work. You sit at home unemployed, you can get 600 weekly. So the wages per hour rate is roughly equivalent to more than those actually to work. Okay, on average about 12. So now you get 15. So that's why the American wealth is actually higher than the before. Okay, despite the pandemic. Okay, my view here is actually this. So why they have Democrat actually passed all these stimulus packages, because they noticed that the Obama, after 2008, actually, the stimulus actually they have actually not big enough. So that's why when it come to the midterm election, they face difficulties to fight the Republicans. So as a result, they insist these stimulus packages. So one time with that come out, to boost the economy. So that's why US economy will grow very high this year. Okay. So of course, because don't have to work. So for those actually quite worried about productivity, of course, if you don't have to work, get money, of course, it's actually not good for the productivity in long term. Okay, for short term, of course, good for the economy. Okay, now Biden policies, if you look through, from January until right now, 2nd of January until right now, basically, the green energies, the EV car, green energies, all getting higher, of course. Then later on, you can see, benefit will be the utilities, the infrastructures. Okay, technology sectors about neutral. Okay, the one loser will be mainly the energy. And now the key risk actually talking about the Biden may impose higher tax rates already. So market not factor in these higher tax rates. Okay, so of course they will affect especially those big good profit, especially the tech sectors, so will be affected. Okay, those benefit, whatever benefit earlier in 2000 last year, 2020 last year, of course will be affected. Once they impose higher tax rates. So market have not factored in this factor yet. So whether can be successfully implemented remain to be seen. Okay, but you notice that actually the voices start to talk about higher tax rates already. So this, of course, this actually these are potential worries that may come in later on. Okay, now you can see over here recently in the February job data, basically the March job data announcement, actually the February data basically come from the leisures and the hospitalities. Okay, that's why some hedge fund in US start to switch the money to from some actually offloading tech stocks and move to the leisures and hospitalities, gaming. Okay, so just like Malaysia, you're getting Malaysia stock price getting higher and higher, right? And we notice that if you pay attention to the, I mean, especially MIDF actually do have a compilations announcement weekly. Hey, we have foreign fund coming in already, you start to have an article saying that Malaysia is cheap, So my view here is actually with the recent announcement, the name is actually Permacasa, okay, because each time I have a different name. So I didn't even remember the name. Permacasa, it's 20 billion. So of course, it will boost the economy, okay? And our government right now is actually not going to impose MCO already, okay? So yeah, you can differentiate between the MCO, CNCO, RMCO. I think you only can remember is actually whether the border closed or not closed only, okay? I mean the state between states. So my view here is actually our government, the direction now is actually using the vaccine going to solve this COVID-19. Okay, not going to use the lockdown already. And in fact, actually, our health ministry actually doing quite well, able to bring down the cases. Okay, I will share with you later on. So remember, take note of that. Recovery ready, on your leisures and hospitality. Okay, so focus on recovery sectors. Okay, and a lot of times, I say this, say Genting still cheap. Then people say, you cannot because I missed out $3. Now $5, how to buy? I say still cheap. Then I say cannot because $3 I missed out the opportunity to buy. Now, of course, $5 cannot buy already. Then they'll come out another theory say, oh, because of the certain glove stock, actually from $13 ringgit actually dropped to 4 ringgit now, it's actually cheap. So remember that investment is not on because it dropped from quite high, dropped to the current level, then become cheap. No, it's actually looking at the next 6 months, the earnings will be higher or lower. So for gaming, like I think the theme park is going to open in second half of the year. Of course, according to the announcement. So of course, the stock price will getting higher and higher. Okay, so but for the glove, okay, later on, I mean, you have a chance to share with you that the average selling price is coming down. Even the owner also mentioned that on average, for 3 to 5%, the average selling price actually drop per month. Okay. Now you can see from here, Trump doing good job, to close up the gap, but the China economy is continue to grow higher and higher to catch up. Okay, so the tension between China and US, of course, for the next 5 years actually will continue to be tense. Okay, don't expect to be good. Okay, so whether when these two countries will settle, then will depends on the US whether so you don't expect a lot of surprises from this tonight. I think 18 of tonight the meeting between the 2+2 meeting between the China and the and US in Alaska. So I don't expect any surprises from the meeting. So basically the meeting is three I'll say can divide it into three sections. The first section actually what the China wants actually is to reverse whatever Trump those tariff imposed on China products. Okay, the second part is actually the whether the China and US need to understand the tension between them that can lead to military conflicts. So especially in related to Taiwan area. So they need to control the conflicts that they have, okay, on those areas, especially in the China's the Taiwan Strait. Then the third part is actually the work on the things that can corroborate together, especially like climate change, that kind of things. okay, climate issues and other issues. So, but of course, the first one is actually they want to reverse whatever the Trump policies are, the tariff imposed on China products. Then only talk about the control, the conflict, then talk about the corporations. And you can see from here, there's still some gap. No, the US GDP potential versus the reported GDPs. So that's why they need this 1.9 trillion to boost the US economy, and so that the US can go back to the original potential levels. I'll share with you that with this 1.9, I think they can, and more than enough already. Okay. And you can see from here, despite we have pandemic, right? Well, personal income actually getting higher, okay. So that's why American wealth, they actually quite a lot of people have money, 1,004 each person, one off. Then your husband and wife 2,008. So it's like Christmas, every few months you have stimulus here, stimulus there, So every few months, so basically American, the key part here is actually the savings rate actually increased. So not everyone actually spend those money. Okay, that's one part. Second part here is actually because of this money they bring to. That's why you have this GameStop, that kind of speculation. You have Bitcoin speculation. You have these SPAC, that kind of bubbles. Yes. So we do have signs showing that the world market, the US market, all this heading towards speculations, the bubbles there. So speculative bubbles. So be careful because of all these free monies. Okay. That's why, of course, you're due for some corrections. Okay. Now, FOMC meeting we have March. Okay. To me, the crucial one is actually on the 27th, 28th of April. Okay. The next one. This one, yesterday, of course, nothing. The second one is actually 27, 28 will be crucial one. Why? Because the Biden 100 days actually on the 30th of April. Now 30th of April. So by that time, we are talking about, because he says that you want to have 100 million American vaccinated. Now already achieved that already. Okay. So coming to these numbers already. So don't have to wait. So once actually they have infrastructures, then they actually can get vaccinated. American can get vaccinated quite fast, some drive-through all this. So my view here is actually by 27, 28 of this FOMC meeting, you will see, and with the inflation getting higher, then market start to worry. Actually, market worry what? Market actually worried when they will taper it. Okay, tapering means they going to slow down on the buyback bond activities. Now they still buy back 120 billion per month. So the moment they have some signs showing that the Fed start to say, oh, we may consider or whatever, then stock market will start to come down already. I'll share with you later on. You will see the analyst view. Okay, so that's why this April, this date, take note of that. Market may have quite high volatility, especially Biden actually. We are talking about 40% American may have, or because per month 10%, 10%, 10%. By April already 40% already. So the cases will drop to low level and US economy will recover. And plus this 1,004 per person all this stimulus 1.9 trillion. So of course US economy will go up very high. The stock market almost quite high. So, and you're coming to sell in May, go away. So normally before sell in May, go away. Normally market actually will not wait until May to come down. Nowadays actually sometimes middle of April start coming down already. If let's say some of the signs showing some to say something in the media, you will see. That's why be careful on this date, especially the Biden 100 days. Biden 100 days roughly the 29th, 30th of April. So this actually the fact just released yesterday. I believe some of you not really pay attention to it. Actually, the GDP for this year, US is actually 6.5. Very high, friend. Normal American, the US GDP is roughly about 2%, 6.5, quite high, okay, higher than normal. December, the forecast is only 4.2. Now they actually, 6.5. So please take note, the revised higher. So that's why the US GDP will be very good, okay? And talking about this year, no, the inflations, we talk about 2%, okay, and the unemployment rate will come down to 4.5 and then keep on coming down to 3. So roughly 3% actually, consider almost everyone, fully employed already. So when it comes to 3, so my view here is actually with this GDP growth, US actually may actually go back to the normal potential GDP already. Okay. Now, the survey from economy says that the hike maybe will come in 2023. My view here is actually now the Treasury actually in charge by Janet Yellen. She actually, if you review her performance during 2008, how she handled the Obama time until the economic recovery, people criticized her on her reaction too slow in reacting to inflations. So I'm not too sure, whether she will correct this time. My view here is actually I don't think US will only wait until 2023 to increase interest rates. Okay, even though wait until 2023, the market by 2022 second half or 2022 market will start to factor in high interest rate environment already. So you can see things actually reacted very fast. Okay, as I said to you, we are talking about pandemic. 100 years only happened one time. Okay, so drop also fast and recover also fast with all the stimulus. Okay, so unwind position, I also believe that will be fast. Okay, now you're talking about here will go up to 0.7%. No, okay, by the economists. No, they've done this from Bloomberg. Okay, done survey done on actually 5th of March to 10th of March. Now, that's why this year's 6% growth, then actually will come down the effect of the stimulus. My view here is actually this will be the last stimulus already because this stimulus will last until September. So the payment. So my view is after September, no more already. So the effect, of course, will boost everyone happy with the extra money that they have. Like every week, like Christmas, Christmas Day, So of course, free money, okay. Now, with this, so the GDP after that will slowly coming down already. Okay. Now, when to taper? That's why I said to you, when to taper? The economist's view is actually 4th quarter start to taper. Okay, highest. So of course, highest I say 1st quarter. My view here is actually market when come to 3rd quarter. That means we're talking about May, June, July. They start to a lot of articles start to talk about the Fed may start to consider taper already, start to slow down bond buyback process already. So when the Fed start to think only, not implement yet, think only to consider. It means 6 months before that, because stock market always acting 6 months ahead. So they start to consider taper only. Market drop already. High comes in already. So in Cantonese, okay. So that's why, of course, this year, sell may go away. That period will be a quite tough one. But remember one thing. Remember one thing. Don't expect to have market will drop to very low levels. Correction 10-20% is expected. Okay, now, so you ask me, I will say 10-20% will go back to roughly the long-term line, the green line. For the Dow, maybe about 28,000 levels. Okay, for the Nasdaq, okay, about 11,000 levels. Okay, to me, the recent Nasdaq low here, 12,000. If you calculate, I mean, you understand roughly the concept of the head and shoulders. So to me, this is actually the head. This is actually the neckline. So roughly about 10% here. So if you understand the drop here 10%, so you add in another 10% drop roughly here about 11,000 roughly okay. If now market can calculate precisely, then it's not called stock market already. So this one is actually will be the right shoulder already. After that we'll go through. Okay. So I don't think can go up very high. Okay. So but remember that with all this, with the new economic growth, tech sectors definitely will do well in futures. Just that correction 10-20% is actually expected. Okay, why? Basically, it's like this. If you look at the Bloomberg's, not my numbers, Bloomberg numbers, okay, the forecast of the PE of the all these stocks, all the tech stocks. So the average is for 2.1. And you look at the forward earning per share growth, it's actually 29%. So if you understand pack theory, so 42.1 divided by 29 is actually 1.5. More than one. More than one means what? More than one means it means that expensive lah. So why actually tech stock come down? Because the earning growth is not high enough to support the PE. So when it's actually considered acceptable, so it's actually, if let's say the earning growth is actually 29%, the PE 29, then consider fair lah. For at the moment, it's actually the PE 42, but the earning growth only 29. So that's why they need the stock prices need to come down. The tech stock need to come down to catch up with the earning growth. So because they overvalues. So to me, it's actually normal. Okay. Some people actually relate it to year 2000, that kind of tech bubbles. My view here is nowadays to go back to that level, I think it's quite difficult already. Okay, because nowadays we do have robot advisors, algo, all this. The market actually going through the correction actually quite fast. Okay, you look at the sell down of Tesla, wow, very fast. From 800 plus, wow, drop all the way 500. So, and it actually corrected, quite significant percentage. So my view here is actually with all these robot advisors nowadays, so the correction will be fast, steep, fast. Okay, just like the last year, March, right? Within 3 weeks time, the Dow Jones can drop 9,000 points, 9,000 points, 29 to 18,000. So within 3 weeks only. So same thing here. Be prepared some corrections. Okay. That's why I already mentioned to you already during April times. I don't know which dates. Okay. So, but take note of that. To expect some correction is actually normal. Okay, because the PE is actually higher than the earning growth. Okay, but don't expect to be too negative on tech sectors, because basically the Biden actually will focus on clean, renewable energies, tech sectors continue to grow. Just that because the tax rates, higher tax rate, of course some of the tech stocks will be affected. Will be higher tax. So need to revalue, okay, on all these tech sectors, especially making good profits. Now, this is actually the background pictures. Is actually I went to Taiwan. Okay, so if you look at these pictures, actually it's actually sunset or sunrise. It's actually sunrise. I took it. Okay, Hawaii actually in Hualien. So why? Because my view here is actually we are talking about global market economic outlooks. Basically, we are recovering already. Okay. Now, if you look through IMF reports in January, pointed out, in terms of the forecasts, all getting higher. Okay. Then and IMF January updates. Okay. The key part from January 2021 update is actually the US number. Can you see over here 2% here? Okay, they actually changed the forecast for these to 5%. The Fed actually does not exceed, it's actually 6%. So 6%, normal in 2019, US about 2%. So this year, last year dropped about 3%. So 3% plus 2% is actually 4%, 5% is about right, because you drop 3%, then you actually add back the normal level 2%, right? And you can see the stimulus economic recovery, right? So you expect about 5% plus, but 6% plus means this 1.9%, 1.9 trillion actually do give extra impact to the economy. That's why some people start to worry about this 1.9 trillion. Okay, is a potential. I will not say time bomb. I will say is that it's a problem when you printed that kind of money. So to me, the tapering process will be faster than you think. Okay, that means we will not wait until 2023 only. Okay, with the inflation generating higher, I think with the oil prices getting higher now, okay, without no border opening, we are talking about Brent prices already 70. If you resume flight, international flight, continue with the vaccine coming down, by year end, so border may open, we created green bubble, so a lot of people can travel because of the vaccine. You can have a passport to travel because you're actually vaccinated. So my view here is actually the international flight will resume. So airport business will actually recover, airline will recover. So the consumption of oil, petrol, definitely will be higher. So easily oil prices will go up to 80 or 90s. So with that, inflation getting higher, okay, with this stimulus 1.9 trillion. So my view here is actually the GDP is actually, now you see the Fed says is 6%, quite high. So my view here is actually the tapering process will be faster than you think. Okay. Li Keqiang actually on the last Fridays, he say that 6% GDP growth during the Liang Hui. So my view here is actually a bit conservative. I think China actually facing some slowdown in economic growth. They are actually doing quite well last year. Why? Because other people not doing well. So a lot of business orders actually manufacturing passed to, they received very high order last year. So of course when all other countries actually start to recover, so the order will slow down. So you notice that the manufacturing of China is actually slowing down already. So that's why the Li Keqiang, his tone, maintain a 6% growth. I think quite conservative. I mean, even though IMF forecast actually it's about 8%, I think it will be higher than 6%. Okay, so because if the normal level is about 6%, so if you add in the 2% here, that's why 8% growth. If you taken into considerations, he says 6%. That means 6% growth. Because you actually lower the levels actually about 2% growth here. So basically, it's supposed to be will grow higher because economic recovery. So to me, that's why people are disappointed with the 6%. So my view here is maybe the numbers, they are quite a bit conservative. I think the number may be higher than 6%. Okay, but they're actually facing some slowdown already. That's why you see over here, IMS actually revised lower a bit. Okay, Malaysia, this actually done actually in October last year. So the forecast that Malaysia is 7.8. Okay, they didn't provide the forecast for but they're doing recently announced actually 6.5. They lowered down from 7.8 to 6.5. I think 6.5 roughly the number because of the lockdown, the second lockdown, MCO 2.0 actually the impact actually less. Now you look at the global economic recovery, okay, the industrial productions, manufacturing orders all recover. Now talk about US economy. Now, when you talk about US economies, you see the claim numbers keep on coming down. The total initial numbers keep on coming down. And the initial claims, though, not like overall, it's actually coming down. Then the job data, okay. Earlier on, actually, we have a negative, but actually now the job creation really. The number actually will go higher and higher and higher and higher because of US economy recovery, with this more American and vaccinated. That's why you see a lot of business actually open up. I mean, they actually talk about don't have to wear masks, pubs, all this, certain part of the US, individual states, they have their own control. So different policies. So that's why overall, I think the recovery ready, okay, will recover faster than they think with these stimulus packages. Okay. So unemployment will go down lower to about 4%. That's how you see the forecast of the Fed. The consumer jobless claim keep on coming down, okay, because of economic recovery. Then it will come down lower and lower. Okay. GDP recovery, just I mentioned to you, the GDP numbers this year, maybe about 6%. Okay, it's quite a good number. That's why the Dow Jones jump in this manner. Okay. Now, how about US dollars? My view here is actually US dollars from now onwards, with the higher inflations, higher economic growth, US dollar will strengthening further and further, will recover. Okay, so it will go higher like this, no? Higher over here will go higher. Okay, so that means renminbi will depreciate, ringgit also will come down. Okay, so of course we also recover. Okay, but because with this US economy is getting higher, so I expect once the next few quarters, we don't have to come to year end and talk about tapering only. You see the US dollar will jump to 9500 already, very fast. Okay, the strengthening of US dollars. Okay, you can see over here, as I said to you, the inflation getting higher oil prices. Another thing, please take note. You notice that the Biden actually strike on the Syria. So Biden not Trump. So you go back to Obama time. So I think the tension in Middle East will be higher. You see the Iran not intend to talk to Biden, and they actually start the uranium, the levels getting to certain levels that can cause concern to Israel. So my view here, the Middle East tensions is actually getting higher. That's why the cooperations between China is actually required. Okay, because the Iran just don't want to talk, and the same thing also North Korea also don't want to talk. Okay, I'm going to test on missile already, North Korea. So my view here is actually the tension is getting higher. So all this, of course, will affect especially the Middle East, the oil prices. Okay, the oil prices will surge. Now, consumer sentiments recovery. Okay, you slowly go back to expect ultimately go back to 100 before the pandemic levels. Okay, under Biden, the retail sales definitely will higher because everyone get money, because okay, start 1,004, so like Christmas, so 1,004 very good. So don't the world also got extra money. 1,004 a lot. No, you look at how much the Apple one new Apple phone, how much only. Okay, so that's why you see manufacturing getting higher. Okay, the US economic recovery, the production, the industrial production of recovery. Okay, now China economies. So this one actually 2019 I went to China. The background pictures. Okay, this one I took the picture I took. It's actually Great Wall. Why I choose this back as a background pictures? Because I want to let you know that China is actually a long history. So the wall built even before the US found. So my view here is actually the two big countries need to sit down and talk, okay, to solve whatever differences between them. That's why like Lee Hsien Loong from Singapore say that we are caught in between. So key thing is actually these are country with a long history. So not like what you want to do, you can do it, like whatever you want to do. And after all, US and China have a serious fight in the North Korea war and Vietnam war, and US unable to defeat China. So both of them cannot defeat each other. So they have so we also don't want this to go up to the military levels, but the tension always quite high over in that, especially the Taiwan Strait. Okay, so to manage the differences, actually it's key issues. That's why everyone, even US or even Australia expert also says the tension is very high, very high. Okay, so and China, the stand right now is actually whatever their own country, whether Xinjiang or Hong Kong or Taiwan, don't come and and disturb already. So that's why this meeting is quite important. So China GDP growth, you notice that slowing down a bit. Now that's why I said to you, pay attention to China numbers. So while everyone actually suffering, they're actually doing well. So of course the orders will go to them. So they're doing very well. But you notice that when other countries start to recover, hey, the PMI, the manufacturing orders start slowing down. No? That's why I say to you, they actually start to be quite careful with the GDP numbers. Last year, they didn't mention the GDP, but this year, actually, they mentioned about 6%. It's quite conservative. They maybe can achieve higher than that, but they're also facing the slowdown in China economic growth. Okay, but overall, the industrial production is still growing compared to last year. The 7% growth is quite impressive. But the orders actually, the orders actually slowing down. Retail sales are not as impressive like US. So, but it's growing about 4%, 4% growth. US, free money, that's why grow at 7%, higher than China's. China inflations, I mean, they don't have inflationary issues, but the become less negative already. Now, China renminbi, my view here is actually will depreciate. Okay, because of strengthening of US dollars, will depreciate. Okay. You look at the trend now, I think actually it's over already. Renminbi, Malaysian ringgit also the same. Will go, renminbi will go back to maybe 6.6, 6.7 already. Will go higher. Will depreciate further. US dollars. Shanghai, China economy in general, recovering. Okay, the stock market will go higher. That's why you see nowadays. So even the China central bank say something. You see the stock market actually drop in Shanghai, in Hong Kong. Then you notice that regional market drop, and US also market drop. No, Europe also market drop. So nowadays you notice that with these two superpower, China economy is about 70% of US economy. So that's why you say who affect each others. To me, it's actually both affect each others. Okay. In Mandarin, sometimes we say 你中有我，我中有你. So that's why we influence each others. So that's why when China actually quite worried about this bubble. That's why you say something about they notice the bubble. That's why you see the correction. But in general, the trend is actually getting higher. Okay. Now, this picture, the background pictures for Malaysia economies, I took in KLCC. So you know where is actually the best place to take this picture or not? It's actually in Public Bank, the traffic light there. So I took there. So Malaysia GDP economy will depend on two things. What are the two things? Okay, as I said to you earlier, the two twin towers. Basically, to boost the Malaysia economy, you need we're not going to have lockdown already. It will depend vaccine to boost the economy. And the second one is actually the stimulus package recently announced. Okay, look at the R0 that we have is actually coming down already. No longer like this going up, so it's coming down. If you look at the overall, the recent trend, you see coming down all the way. So we are 8.8 now, 0.88 now. So it's actually good numbers. Actually, that's why I say our health ministry actually done quite a good job, to bring down the cases. See, coming down. Okay. We'll through the vaccine to bring down the cases. Okay, and a lot of people do not understand. Okay, my view here is actually some people say, oh no, we're going to have this virus mutated, second strain, all this. So my point here is actually, you notice that nowadays, you ask the clinic doctor whether we got patient come in to have flu. Oh, not many flu cases already, right? Why? Because everyone wearing masks. So that's why when you talk to some, we do have a lot of glove lover. They always say, oh, so the virus mutation, and then of course we're going to have a second pandemic. No, the chances of having another pandemic very, very low. You see, because we are well prepared. To immediately lock down already. You see, all country lockdowns not open up. You see, whether South Africa or UK, immediately the border closed. We know already. Okay, why we Asian country, handle the pandemics better? Because we gone through Nipah virus, SARS, were barely affected, right? Yes, we are well prepared because we gone through. Same thing like this pandemic. The whole world gone through it already. So they know how to handle another pandemic. First one. Second part is actually everyone wearing masks. Even the normal, to have this virus, also, quite protected already. Okay, so that's why my view here is actually the vaccine will plus we will follow the SOP plus these vaccines. Okay, will bring down the cases further. Now look at this this is actually the twin tower. I say the second part is actually stimulus. So we recently spent 20 billion and 11 billion is directly boost the economy. So to me, definitely, initially, people say about think about maybe this year will 5%. I think with this 20 billion, I think we'll go back to about 6% growth. Okay. So I think one good part is actually our higher oil prices. I think our government have monies. With the current oil prices, I think easily can bring extra, 5 to 10 billion, extra revenue from the petrol prices. I mean the oil revenues. So that's why I'll share with you later on. I think we're quite okay already. Okay. You can see here it's already coming to about 4.3%. Okay. So this 20 billion, extra 20 billion, this one not counted, I think will be boost up to extra that kind of 5%, extra about 1.4 here. So about 5-6%. Okay. And this actually the fourth quarter numbers. Okay, our fourth quarter actually dropped more. Okay, negative 3.4%. Okay. So, and the key part here is actually our private consumption actually dropped. Fourth quarter we still have lockdown during that times. So then private investment, but we are net export actually slowing down. Okay, in fourth quarters. Okay, and the imports actually improve at a faster pace. Okay, then we do have a private consumption, moderate expansion in government spending. Okay. Now from the Bank Negara, this is actually the Bank Negara recently the announcement. Okay, so the impact for the MCO 2.0 is actually less. Okay, that's why we able to maintain the growth and bring down the cases. Well done to the government. Okay. Now then, basically we are following the SOP. So we are targeted lockdown. So we manage to bring down and let the economy continue. Okay. So that's why we cannot bring down the cases immediately. But with this vaccine, you see the cases can be bring down to the people vaccinated. And our health minister said that ultimately their target is actually 160,000 per day. So I calculate 160,000 per day. You are talking about 70% of the population, about 21 million. Okay, we actually need about 4 to 6 month time only. Roughly, we already get vaccinated already. So even though slow a bit now, so but plus this March, April, I think so. You give about 6 month time by year end, I think we'll reach 60-70% already. So that's why your year end when the school holiday, okay, likely you go to Genting to have holiday rather than go elsewhere. So that's why local tourism related stocks actually will recover, not only Genting only. Okay, there are others. So that's why they will recover. So that's why you see the airlines, Air Asia getting higher. Okay, airport. Okay. Now, this is actually the Malaysia GDP's forecast during the last year. Okay, forecast 6.5 to 7.5. I think maintain it. I mean, even though our recent fourth quarters announcement, GDP announcement by Bank Negara didn't mention it. Okay, I think it's roughly these levels are this extra this stimulus 20 billion. So IMF forecast actually reduced to 6.5. Okay, you must remember we are negative last year, negative last year. So that's why roughly about 5-6%. You get these numbers. Okay. World Bank is about 6%. So roughly about 6%, okay, or higher. So and this actually last year drop is because of the lower revenue, mainly come from the oil prices drop. Okay, the revenue drop last year. Now, the crude oil Brent, the actual price. Why I'll share with you these slides, because if you look at 2008, when the economy recover, the Brent oil prices actually from about 50 jump up to more than 120, 130, okay, within short period of time. Okay, so my view here, this round actually from 20, okay, I believe it will go up to maybe 80 to 90 levels. Okay, but to expect to go up to 100 and 120, unless you have a war, if not, I don't think so. Then you ask me whether we're going to have war. Well, depends. Okay, as I said to you, the Israel have the tendency to, because they're not comfortable of the Iran actually, the storage of the uranium to more than 20%, and you already achieved that already. So the tension is quite high, okay, over there. And you can see, recently, the strike on the Syria, they're quite close to Iran. So my view here is actually, over there. Then you ask me what's going to happen. I'm not too sure. Or depends. Okay, it's not Trump periods. Okay, now it's actually, like going back to Obama time. Okay, Obama time actually, Biden actually, the vice president. So that's why he fully, aware all this. So I think he also participated in those foreign policy during Obama time. So that's why I think, well, depends. Because basically Iran don't want to talk to them, and the minister actually, okay, from this 20% could go up higher, it will be quite fast. Okay, the 20% of uranium. So the drop, but that's why I said to you, with the recovery of the oil prices, okay, so that's why the revenue actually increased. I go back to the 2019 levels, about 10 billion here. That's why I said to you. Okay, but in general, industrial production is actually slow. I mean, recovery a bit, but year-to-year changes actually, not really impressive. Slow down. Okay. As I said to you, whoever benefit earlier on, actually will show some slowdown. Okay. This actually the Malaysia 10 years charts, the 10 years charts from here. Okay. The 10-year bond yield. Okay. 10-year bond yield, this one actually, is recently went up to 3.5%. Okay, 3.5% here. Okay, so this 3.5% here, the bond yield, same like the sound you see the bond yield on the US 1.5%. So that's why you see the drop is actually the bond price actually quite fast. Okay, and actually drop very, very fast. Now, the next meeting, okay, for the Malaysia Bank Negara meetings will be in May. So I don't think they will make any changes on the interest rate. That's why the interest rate will maintain at these levels. Okay, at these levels. So the key part here is basically given at these levels, if you look through this on the interest rate level, is already lower than the 2008 lower of 2%. So I don't think with the economic recovery, the Bank Negara will lower down any interest rate cuts. That's why one sectors beside tourism related will recover. The next one will be the banking stocks. Okay, and you can see from here the inflation rates actually become less negative already. So we're actually going to have inflation already. If let's say the next few years we're going to have implement the GST, okay, then of course the inflation will go higher. Okay, so I don't think Bank Negara will cut interest rate, from the next MPC meetings. Okay. Now, stock market outlook for 2021. Okay, as I said to you, it's actually like a Spanish flu. Okay, 1918 to 1920. Okay, on handling the COVID-19. Okay, you see everyone wearing masks during that time. So the whole thing is actually 2 years periods. Okay, then the whole thing recover. Okay, so and the Spanish flu in 1918 to 1920, they start in March 1918, ended in March 1920. Okay, so the peak is actually in 1918 September to November. So they actually have if you look through, they actually have a 1, 2. They also have a second wave, but second wave is actually lower. Okay, so that means to say, possible when it come to the cold weather year end. So maybe some area, some country may still have a spike up in the cases, but because of more people vaccinated, they will go down to very low already. Okay, so the pattern quite similar. Why I share with you this? Because what we are interested is not talking about Spanish flu, what happened in that 2 years. What is after the Spanish flu that's more important. So the key part is actually what happened after the Spanish flu. After the Spanish flu, the US have a solid economic growth for 9 years now. Okay? Therefore, how about the stock markets? The stock market actually jumped by 500% within 9 years period from 1920 to 1929. So my view here, we are going to have a similar pattern here until the next real big bubbles. But in between, we have some correction here and there. Okay, as I said to you, normally 10-20% correction is normal. They also have a correction here. But after that, they're going all the way. Of course, if let's say you have they come to year end, when tax stock actually drop to a certain attractive level, you don't mind buying it and keep it because long term will continue to be good because things change already. Not going to go back to a normal level already. People buy online, like you buy Shopee or Lazada, this will be the new trend already. Okay, certain pattern change already. So for forever already. Okay, to me, very hard to go back to the previous levels. But economy in general going to grow. Okay, so I'm not saying that the Dow Jones definitely will go up 100%. I just say that the key point here is our pandemic is actually quite similar to Spanish flu. So my view here is actually, since we already have vaccine, we are talking about recovery. So what we need to know is actually what happened in 1920 after 1920. So actually, US have a solid 9 years growth in GDP. Okay, until the 1929 Great Depressions. So same thing here, the US economy, GDP, stock market will go higher. Okay, so now, KLCI, a lot of people say KLCI past 1 year. KLCI past 1 year. So, KLCI past 1 year. This year. Okay. Now, look at the KLCI past 5-year charts here. Okay. If you look at KLCI past 5-year charts here, the key parts here, you notice that our KLCI already recovered to what, 1610, 1620 level here. So why actually this level? Actually, this actually the level is before the pandemic already. Okay, if you look through here, the pattern here came down. Okay, these are actually the levels. Okay, so it means that we already recover from the whole pandemic. Then you say to a lot of investors, you still have not invested anything yet. But don't worry, we still have a lot of banking stocks still selling at cheap levels. Okay, certain stocks actually, like construction stocks actually still cheap. Okay, property stock actually, some property stocks actually still stay at the March level last year. Do some research. Okay, some good one, construction, property. We still have a lot. Not all stock recover. Okay, blue chip share recover, yes. Okay, but to me, a lot of them actually the valuation actually still quite cheap. Okay, no harm holding on to it. Okay, the Naga, the peak level is for 15. Now I think 10 something, the given 58 cents of dividend. Actually quite attractive, the good dividend yield. Okay, so that's why key part here is actually the already recover, and for those actually missed the opportunity to buy, yes, you still have a chance to buy. Okay, don't worry. Okay, and it will recover because we're not going to have lockdown. But of course, as I said to you, the April to June, that kind of sell in May, of course, will affect our KLCI to come down. That's normal. Okay, that kind of 5-10% correction. But don't expect our KLCI to go back to 1,002 plus. That's not possible at all already. Okay, then this actually CPO price will go higher. Okay, we're not going to come down already. The prices, if you look at the second half of the year, actually the CPO price is actually coming down. But one thing here is actually my view here is actually after this, the food crisis will be serious issues. You can see, the China actually keep on buying the soybeans. So my view here is actually, the suddenly spur in demand. That's why you see the freight prices, the kind of hiccup. So my view here is actually, the demand will go higher. Okay, commodity prices. And recent quarter results, the quarter results reported in the December for banking stocks, some actually, like certain banks actually, reported higher, extension of moratorium. So, to about 10 to 15% of the total loans. So, not too sure on the first quarter. So, my view here is actually, of course, roughly, worst case, I think maybe 5-15%. But should we worry about banking stock? My view here is actually given the the capital ratio, okay, at these levels, I think they are quite safe. Okay, in general, they're actually quite safe. Okay, that's all my presentation for tonight. Okay, pass back to moderators. Okay, Shin.
Thank you so much, Mr. Ooi, for your
Yeah.
share about the US economy, China economy, Malaysia economy, and also Malaysia stock market outlook.
Yeah.
So, any question to ask our speaker today, please put in your question in the Q&A box, not the Zoom chat box. Okay, put it in a Zoom Q&A box so that we'll be able to manage your questions better. And if you're streaming in from YouTube, please type in the live chat. We will also ask a few questions from YouTube because we actually already almost time already, but keep maybe Q&A for another 20 minutes now. Huh? Is that okay, Mr. Ooi?
Okay, no problem, no problem, no problem. Yes, any questions?
Time.
Yes.
Right. So if any question to ask our speaker today, please type there. Okay, I've already got so many questions right now. So let me see. Okay, if the US dollar is going to rebound, would currencies pegged to the US dollar like Hong Kong dollar follow suit? This is asked by Albert.
Of course, if you have a pack with US dollars, of course, will appreciate accordingly. Okay, so because the US dollars is going to rebound, okay, the stimulus actually going to have big impact. Of course, if you talk Hong Kong dollars, of course, will appreciate accordingly. Okay, so indirectly, I mean, like Malaysia versus the Singapore dollars, I think Malaysia will depreciate. I mean, people see Singapore dollars or something like safe havens like in the ASEAN. So that's why, but Singapore dollar also will depreciate, but in terms of magnitude wise, it will depreciate. Okay.
Okay. The next question is asked by CK Ooi. Do you foresee the sovereign debt crisis in US will create another market crash in the second half of 2021? So I guess because I think earlier this month we have another speaker who forecast that there might be a crash in the second half.
So the second half, of course, you're talking about the Europe to have another, because mainly, if you remember the Euro financial crisis, it basically come from the sovereign debt crisis. Okay, the S&P downgrade on on Portugal, Greece, Spain from during that time. But to me, with the Europe, they already set up. I can't remember the name already. The funds. I think they are actually well prepared for all this already. So of course, every country actually increase on the spending on the stimulus packages. Of course, some actually may hit certain levels. So, but I look through the Malaysia also hit to try to curb between self-imposed that kind of limit of 5% the budget deficits versus GDPs. So, but they actually, I think, they look at the the upcoming economic recovery. I think even Malaysia, I would say, I think they will be quite positive. That's why you see the foreign funds are coming in, and then the more IMF, I think the review, I think, on Malaysia is also quite positive. So I think overall, I think Malaysia on the way to recover already, given the recovery. So if we can manage quite well on the COVID-19, and then the economies continue to grow, we attract foreign funds coming in, and with this, so plus the other countries, talk about if let's say for other countries as well. I think in general, most of the country you can see the cases actually coming down. That's why I say to you that if you apply to the vaccines, actually, if Malaysia, that kind of small country, also can get more than 100% of the populations, you can imagine most of the country actually can get ready with the so many are coming out, no? Johnson, all this coming out. So actually, it's the access of the vaccine ready. So I don't think it's actually how fast is government to get vaccinated. So if you get vaccinated, that's why economic recovery. So you get economic recovery. I don't think the rating agency will downgrade it. Okay, like similar in Malaysia. So temporary, let's say in last year, you have a high stimulus. That's why over the exceeded the budgets. But I think if your economy show economic recovery with fast economic recovery, I mean Indonesia, like all these Philippines, I think unlikely to face that kind of slow debt crisis. Some maybe, but I think to drag down like Europe, started in Europe in 2011, 2012, 13, that kind of European crisis. I don't think so already, because the Europe countries, European EU already set up the mechanism already to cater for it. That's my view.
All right. Thank you so much for sharing your perspective. We have taken 2 questions from Zoom, so let's go to YouTube. All right. We have this gentleman YJ Eng, who asked this question like, "Hi, do you have any concern on the high debt in the US and worldwide countries? Will the bond yield hike cause high service debt and lead to economy or government into trouble?"
Short term wise will not, okay. Long term, yes. That's why they need to increase tax. So of course, the increased tax, of course, the stocks market need to react to it. Okay, the stock market boom during the Trump periods because of the cut in tax actually. So that kind of impact immediately. The stock market jump all the way. So of course, now they're actually going to unwind positions. So so to boost the economy, to lower down the budget deficit, that kind of things. So my view here is actually short term wise, I don't think will be a major issues. Okay, if I'm not mistaken, the majority of the debts actually is still owned by the local institutional funds, similar like Japan's. The debt over GDP come up to be 200%. So I don't think a big concern. I think in US about 100% plus, more than 100%. So not really. If let's say mainly owned by the local institutions, so I think not a big concerns. Okay, of course, if you look at country like the Japan's and China, they're holding the US Treasury, about 1 trillion. Of course, not happy with the spike in actually, I mean the bond yield, that means the bond price actually dropped already. Okay, but you can see from over years, I think a lot of countries actually start lower down their US Treasury holding already. Just that they cannot sell all, they still hold. So, but if you look at the rest, actually mainly are holding by the local institution. So I don't think it's a big concern. Okay, but on tops, I mean in terms of the serving steps, of course, that is long term problem with at the moment the interest rate actually still low, so not a big concern. But actually the big concern is when the interest rate actually the bond yield go up to 3% plus 4%, then you are talking about servicing debts, actually the big issue already. Okay, if you're looking at these levels, 1% plus, I don't think the big concern. Okay, even though the bond actually renew at this coupon rate, I think not really big issue. The issue is actually when the bond yield actually jump up to 3%, 4%, then it will be a big concern. Okay, that's why I said to you, my answer is short term wise, I don't think so.
Okay. Yeah. There have been a couple of people asking about what is your view on the precious metal market?
Gold prices. Because of the spike up. I mean yesterday, it says that because the US dollars weakening, that's why people buy gold. Okay, we continue to have stimulus, but I don't think the gold prices can go up very high already, given that the US economy recovery. Okay, so and I don't think we can expect because this tapering process, especially the the 120 billion will stop likelihood by another few, by next year already. So that's why it will slow down already. Once it actually starts slowing down, you'll see gold prices coming down. So that's why my view here is actually, I know some actually recently actually line up to buy gold, right? Okay, but some actually because of the Haraya. Okay, but my view is actually I don't think you will go up very high. Okay, to expect to go beyond 2,000, I don't think so already. Because once the US, the Fed start to taper, means tapering means starts buy back bond, slowing down the process of buying back bond. You will see because it means that you're printing less money. Okay, so you don't need that because US economy recover already. That's why I shared with the sound that the July the US will reach the almost 70% of the herd immunity already. So that's why be careful on that. It means the economy recover already. A lot of activity will open up already. So the cases will drop to low level. So they don't need to print a lot of money already. So with the 1.9 enough already for economic boom already. So that's why with that kind in mind, the gold may not able to go up very high. That's the key point. Short yesterday up, yes, but cannot go up very high. Yeah.
All right.
Then?
Okay, the next, I find a few questions quite similar, so I just summarize them. So what, given the outlook that you've just given, what would be the sectors that we should look at and how we should construct our portfolio?
Okay, banking sector definitely will do well. Okay, focus on recovery sectors. So banking sector will definitely do well. Tourism related, like I said, you see Genting Malaysia will do well. You see every day, getting higher. Then utilities like Tenaga, at least price still cheap. And then my view here will be the next one. You may see consider constructions, infrastructures, constructions. Okay, so will do well. Tech sectors, be careful about tech sectors. Okay, things some actually may price in already. Okay, so if let's say the US actually have some correction, of course the tech sector will be affected. So other than these things, plantations wise, no doubt actually the price actually hit 4,000 plus. So, but actually if you look at the second half of the year, and the prices coming down to about 3,000 or below. So to me, short term, yes, 4,000, but I expect the prices will come down. So, and they have higher, the production is lower. So that's why net off the effect. You notice that each plantation shares actually unable to move a lot. Okay. Then other than this, I think roughly I cover all the sectors. Consumer, recovery, of course the consumer sector will do well. Okay. So like those like Carlsberg, all these, of course, the business will recover. Okay. With no more lockdown. Okay.
Okay, thanks for your input. Now, in reference to your, comment that the CPO price is kind of high right now, and there's also a follow-up question to ask now: how come, given so high CPO price, but the plantation stocks price never move?
As I said, the production is low. That means because of you do not open up the borders. So the fruit actually, some I think the Peninsula Malaysia, some of the plantation actually facing the shortage of labor. So that's why not enough manpower to collect the fruits. So that's why the production is lower. So you notice that production lower. So that's why short in supply. That's why prices jump. But they foresee, if let's say, later on, they will solve this problem, then the prices will come down already. So that's why you see the prices may be good, but the drop in the productions. So overall, the revenue actually drop. So that's why they don't benefit from it. Benefit a bit, okay. FFB, I think they benefit a bit. Now it's about 700 to 800 already. So some may not able to because of the lower fruits. Lower collections. Shortage of labor.
Okay. There are also a few questions asking about the GE, so the general elections. So what is your view on the possible election in this year and how will it affect the stock market?
I think will be either in November this year, if not will be next year, March or May. Okay, it appears that I think from the I read somewhere, it's actually this year may not have. Okay, but of course, I think the UMNO side may want to push it. So you can consider construction sector. I mean the election related stocks, UMNO counters may move. Okay, so Sarawak election is also the same. Okay, may move. Okay, so I mean, no doubt the risk today cases actually up a bit. So, but I think they should be able to control well. Okay, then they have an election. So that's why after the emergency, Darurat, I think the 1st of August, and then our cases coming down and more people actually vaccinated already. I think they will push for election already. So as I said to you, maybe by year end, I think our government actually have the intention to at least to reach the herd immunity by year end. So by this year end. So that's why we buy more than enough. Okay, so my view here is actually if that happen, I think especially after 1st of August, okay, after the emergency, I think you will see more and more news on the election. So that's why be prepared. Okay, so UMNO related stocks plantation. I mean the election related stocks actually may move already. Okay. Ruling party existing, I think the PN want it to be next year, but I think the UMNO want it this year. So it will depends then, but they'll push for the to reach the herd immunity. Then if it really come down to below 100 and then come down the cases coming down, once actually vaccinated, a lot of people are vaccinated. I think the chances are quite high already to have it in November. Then the election before that will start to move already.
Okay, so can we also get your view on the REITs market? So that is coming from Ooi Kok Hwa.
Okay, the REITs market basically, my view is, provided you look at the office REITs, I think it's tough. Okay, a lot empty. Then yield is actually good, but basically it's actually the price drop. That's why it appear to be higher. But you look at the actually revenue drop. Retail also the same because actually things change already. Okay, a lot of people actually don't want to go to the shopping mall already. Buy online, buy Shopee, buy Lazada, all this. That's why you ask me, I think it will be quite tough unless actually industrial REITs actually okay, warehouse maybe okay. So but actually office you have oversupply, and then retail also the same. So that's why plus the discount actually they give. Okay, so the collection, the vacancy, things you can see, you go to a mall, you notice empty one. Okay, so that's why I think avoid for a while. Okay, you may be attractive, but scared may not able to maintain the dividend because actually the drop in the revenue collections of the rental. Okay, so office and retail, industrial warehouse still okay.
Okay. Now, since just now you also recommend us to look into the utility stock, so there's also a question on YouTube to ask, what is your view about the renewable energy, such as solar energy stocks?
Oh, solar energies, this will be the in sector nowadays. Okay, so if you look through the IEA, the report, not now, of course, you're talking about the next. That's why oil prices very hard to go up already. You notice that a lot of country, even the oil and gas company, big one, they also spend money on putting money in the renewable energies. So, and you see the renewable energies, the wind, solar, okay, thermal, and you're talking about the hydro, all this will take off, biomass. So my view here is that solar of course actually will be the main one actually benefit among all the renewable energies. So of course it will go higher. Okay. Plus the Biden actually likelihood, I think the Bloomberg actually today actually says that if tonight meeting actually good. So they were talking about April, Xi Jinping may meet Biden face to face. So I'm not too sure whether true or not true, whether they can make it or not. I'm not too sure. Basically, talk about the climate issues. These are this area where the China and the US actually can sit down together and cooperate together. Okay, and in certain part, I think China doing quite well. If you travel to China, actually don't have motorbike. Their motorbike are all electric, no? So not using petrol. So my view here is actually, they are actually the solar, especially solar energies, actually will benefit. Okay, of course, there's many players in us solar. So I think this will be the new trend really. So that's why it affect the oil prices. Okay.
Okay, I see.
I mean the conclusion you see the long term wise actually good. Okay, not short term lah. Means long term wise actually good. I think I expect it. Given the kind of high oil prices right now, of course renewable energy the price also will be high. Okay, so cannot be low one. So definitely the solar will energy related company will do well. Okay.
Okay. So let's do one last questions from YouTube,
Yes.
which is asked by Kwong Seong Lim.
Ah.
So with the trend of the US Treasury yield going higher and higher in the future, does
Yes.
that mean that the tech stock price will come down every time the yield goes up?
As I said to you that just now that the tech stocks actually the valuation is actually higher than their earning growth. So earning growth actually slower. That's why you're using PEG and PEG, PER divided by growth rate. Hey, you notice actually more than one. And I just want to share with you this part here. Okay. That's why they need to go through some like this slide here. So more than one. So it means that the PE need to come down to meet the 29. Okay, the PE need to come down. So that's why and the key part is actually you notice that this is Tesla. Oh, the correction is quite fast, no? So that's why once actually the corrections, that's why as I said to you, that like Nasdaq, you still have that this level here, low here, can go down another 10% to this green color here. Okay, that means the total correction is roughly about 20%. Okay, 20%. So 10% I think may not be enough. Okay, they were heading toward the 20%. So once actually corrected in that levels, then I think worth looking at the tech stocks already. But you don't expect it to go down to the low level, then it will not happen. But I don't think so because we are heading towards That's why, like I said to you, 10-year cycles, like 2018-19, our government everywhere in the world also say that digital transformation. A lot of businesses refuse to change. Then because of this pandemic, force everyone to change the business model to digital transformation. So that's why the expedite the whole process. So once expedite and will continue, the tech sectors, we're talking about the cloud computing, all this robotics, all this will do well, ERP, 5G, our government actually spend all this will do well. Okay, I mean we are talking about EV car, all this. So they want the clean energies. Okay, so of course they will do well. Okay. So my point here is actually the corrections will happen and let it come down, but it cannot be too negative. Okay. So have to wait until the the PE come down to the earning growth. The earning will continue to be good. Okay, this will be the new trend. That's our government going to spend extra money on 5G or this. Yeah. So just that the valuation a bit too high, need to come down. Okay.
Yeah, okay. I actually see that there are still quite a number of questions on glove. Can we just do one more? Do you have anything to add on the glove sector?
I always get scolded by people talk glove. Because actually we do have in everywhere, we do have people actually really like glove. Okay, so my point is actually I actually share with you if let's say you're not too sure of the glove. Okay, so I have slides actually on glove. So very fast, I'll share with you. This actually extracted out from the top glove, the preliminary prospectus sent to Hong Kong for listing. So 我们的收入可能难以维持啊 It's actually fully aware they cannot maintain the profit level like 2020. He say one, no, I say one. It's actually extract out from the prospectus. Okay, and you see the red colors actually is coming down. That means to say this frost surveillance report that I think done actually in November and December already projected the red colors coming down. That's why it's consistent with the owner says that the every month, the ASP, average selling price of the glove is actually dropped by 3 to 5% starting from April. I just quoted whatever he said in the media. No, I say one. Okay, so you see over here inside, if you're not aware, please look at here. The prices coming down all the way, and this forecast done in actually November, December last year. So, and it coming all the way, you know. So it means that you know the stock market is actually always acting ahead 6 months, and you're actually buying something and the prices keep on coming down. And this part is actually not the important. I mean, not only that, the point here is this part here. It's coming down very fast. Okay, these are all extracted out from the prospectus. And the cost of the rubber price is actually getting higher. Okay, no, I say when I see the prospectus there, you see the price getting higher, rubber price getting higher. Okay, and everyone expand their productions. Okay, now this is actually the key part. No doubt, a lot of people actually he say glove actually every annual demand is actually 10%, 10%. Yes, I know, 10% growth. But the issue here is because of this pandemic, the excess of supply. I mean, everyone actually expand the productions, including everywhere in the world, okay, including they themselves also, within this short period of time, going to expand by double of the production capacity. So if you look at 10% growth over here, 10% growth over here, by 2025, the number should be 531 only, 10% growth, 21. But based on the supply that they actually inside the prospectus report, it's actually 746. That's why the price war will happen. That's why the fall heavily king, the state, I think, will slash the price and lower down the price. That's why the price war that you see will be a steep one, price war, especially next year. The key point I want to mention to you is this Fortune Business Insight. Okay, this says that yes, last year very good, right? 2020, right? To reach this level, you need 5 to 7 years. My point very simple. Yes. So many choices for you for buying the recovery sectors. Why you continue one? Of course, some analysts actually they like it because they say that the dividend is good. But the issue here is when we buy stock, we cannot buy stock just for one-time dividend. We want is actually consistent paying good dividend. Okay, so you need to ask yourself, can they pay good dividend given that kind of the drop in the selling prices, the ASP that stated in the prospectus? Not my number. I extract out from the Top Glove preliminary listing prospectus, page 96. You can look at it, the holdings. So I all extracted from there. Okay, I have got reference. So this not my numbers, all inside the prospectus. So I share with you already. So my point here is actually very tough.
Okay, all right.
Okay, yeah.
Me for sharing your insights into the glove sector.
Yeah.
Of course, just now also we appreciate your commentary on the global economy, US, China, vaccine, Biden policy, as well as Malaysia's stock market and also economy outlook for this 2021 and beyond. So thank you so much for sharing your perspective. And right now, let me just share my screen. Just give me a minute to tell you more about our next webinar. Okay, our next webinar is going to be a live chat with Tawin Holdings Berhad. So it's happening on 23rd of March 2021, which is next Tuesday. So 8:30 to 10 p.m. So I have put the registration link into both Zoom chat group and also the YouTube live. So if you want to hear firsthand from our Group Managing Director of Tawin's Holdings, please register for this and come on time on the 23rd of March. You have the first, you have the first-hand access to grill the management on their outlook. All right, so please join this live chat with Tawin's Holdings to hear from the group CEO. So for those of you who have not had a Kenanga share trading account, please fill up this online form to put in your interest, and Kenanga will arrange a friendly dealer representative to attend to your request. So just head over to www.kentrade.com.my/open-account-form. Okay, put in your interest, and then a friendly dealer representative will approach you to help you with the account opening. So with that, thank you.
Thank you very much. Okay.
For sharing your ideas with us today and sharing your outlook for the market for Malaysia as well as the US and China. So thank you everybody, and Have a pleasant rest of the day. We'll see you on next Tuesday. All right.
Okay.
So remember to register for our next Can Trade webinar. Bye, everybody. This is Shen Chu signing off.
Yeah, bye.